Hey, this is just me talking. The further down the risk curve that we go, the further the Bitcoin dominance comes down, the higher the risk allocation and the risk on assets that I'm prepared to be buying. However, I just put a small allocation of my capital in the higher risk ones, understanding if that thing goes to zero, the rest of my portfolio can sustain it. So the one that I'm bringing you today, guys, it is a syrup. Why am I bringing you syrup? It's trading in a pattern. I'm waiting for a breakout, and I'm going to show you exactly how I'm playing this move. Right, first things first, we look at the chart together collectively and we identify one thing: hardly any data to go by. Why am I interested in this, guys? There's loads of hype on X, there's loads of hype on YouTube. And one thing is we can look at CoinGecko and we can see how high risk this thing is. We're looking here at the rankings. It's 191 as far as the rankings are concerned, so far as the crypto market cap's concerned. And we can see this is the market cap: 454 billion, 924, 538. So basically just under half a billion. So just under half a billion is not to be sniffed at. It's not like the small caps where you've only got 500,000, 1 million. It has got half a billion in it. So that's something. And we can see if we stick a Fibonacci retracement on here from that high, from the low here to this high. I'm discounting this high, guys. That was the wick. When you get these launches on the exchanges, you get these wicks to the upside and you get a big sell-off. Happens time and time again. I'm discounting that. I'm using this as the high. I'm waiting for a pullback. And you can see this area has been respected, this 38.2. It's been respected here. It's been respected here. It's been respected as support here. Then we broke through support. And now what happens? It is now resistance. At 38.2 is a key level. Now 38.2 sat at 46 cents. So it's looking like we're getting rejected. What happens? You drop the 38.2, you go back down to the next level. Next level is a 61.8% retracement, which is the golden zone. So the 61.8% retracement down here, that is sitting at 33 cents. So what we're doing now is we're putting in a simple trend line and you're waiting for a breakout. You're waiting for a breakout because we understand one thing. While we're in this pattern here, we're putting in lower highs, putting in lower lows, lower lows, lower highs. Expect to put in a new lower low. What does that do? If you had a limit order there, none of this is financial advice, you had a limit order there, you'd expect that to act as support. You can even go back here. Support, support, resistance. So you know that this 61.8 is going to be a strong support buy. We know that we've rejected from the 38.2. There's a high probability we're going to come back down to this level. Like I say, just to reiterate, between 33 and 34 cents. Then, as the confirmation, you're waiting for one thing. You're waiting for the breakout. You're waiting for the bulls to pop their head up out of this range, out of this diagonal for the first time. So you've got your first rejection point, which is always going to be the 38.2, which is sat at 45 cents, like we mentioned. And once we break through there, expect to break through there with some velocity. So what I'm going to do is I'm going to clean the chart up. And then what we're going to do is we're going to add in a new Fibonacci. And we're just going to run it from, well, we'll stick on the old one actually, because we're understanding that the 61.8% retracement is going to be the low. So we're expecting the 61.8% retracement to be the low here before we get into the swing to the upside. We've got a trend line. We understand that if the 61.8 doesn't get hit and we get a break of trend, that is still good to go because you take out the 38.2 and you've got a high probability of taking out this lower high here. So that's a couple of scenarios that need to play out. If you've got a 61.8% retracement down here, you've got a buy at this level down here. The risk to reward, if you're stuck in your risk to reward tool, understanding that resistance is going to be the previous high and you're wrong when you take out the previous low. So that would give you a 5.31 risk to reward. So what we'll do is we'll look for extensions next. And what we're going to do to look for extensions is we need to measure where the low is. Now, this is hypothetical, guys, because we're expecting price to come down here, reject from this level here, and come back down to the 618. So we're expecting the 618 to be the low. So this is hypothetical. It hasn't happened yet. We're waiting for it to happen. We're predicting if it is going to happen. So this time I'm going to get my fib-based extension and go from the low to the high. We know that that's the high. And you're coming back down to the low, coming back down to the low, to the 33 cents. And then you would expect an equal measure moved all the way up here, 85 cents. The more probable move would be an extension of a 1272. This is swing one. This would be a pullback of swing two, an extension of 1272. If we hit this hypothetical level at the 618, guys, look where that takes us. Look where this takes us. Exactly to the T of this wick. Where does it take us? $1 exactly. Psychological round number. You can't get more psychological than that. $1 to the T. So we've projected that this is going to come down here. Follow this, guys, over the next few weeks to see if this plays out. It's a high probability. You're going to get rejected at 38.2. You're going to come back down to the 61.8. This is how you prepare. You get a reaction from the 61.8 and you expect a bounce from there. You expect a break of trend. Once you get a break of trend, you take out the 38.2% retracement. Your 1-to-1 equal measure moves here. Your 1272 extension is at that previous wick to the T, guys. If that plays out over the next few weeks, we're going to monitor it together, and then we can give ourselves a pat on the back because this low hasn't been put in here yet. We're predicting that the low is going to be put in, and then we're predicting the next move going forward based on a move that hasn't even happened yet. And if that happens, guys, that'll be a pat on the back for all of us. Right, okay, that's about it from me now. It was just a quick update on syrup. Remember, it is high risk. When you go higher up the risk curve, that means the less amount of capital. It's not something I'm telling you to do. It's something that I'm showing you myself. Get yourself in the Discord group. Have a chat with us all, make some new friends. See you in the next one.